The easiest breakdown of America's debt and what we could do about it. Right now it's approaching $35 trillion, which sounds like a very scary number. But economists don't look at the dollar amount, they look at how big it is compared to our GDP. And right now it's 120% of our total economic output. That is pretty high. Call it the debt to GDP ratio, and it's higher than it was in World War II. But who do we actually owe all this debt to? Us. We owe the vast majority of this debt to ourselves. Only 30% of this debt actually goes to foreign holders like governments or other multinational institutions. The remaining 70% is internal. 12% goes to the Fed, 10% state and local governments, 20% is just domestic private investors, and then 28% is within the US government. The vast majority of this debt is just like me borrowing money from my wife. And the majority of US foreign debt is held by our allies and strongest trading partners. While I believe our debt is too high, it's made to be more of a boogeyman than it really is by any political detractor. Again, it's an issue. 13% of our federal spending is just servicing the debt we have. First solutions are cut the budget, raise taxes. So fine, let's have each of these branches audited severely and see what we're losing in paperwork and maybe fraudulent activity. Get rid of the corporate rate cut that dropped taxes from 35% to 21%. And remember, the 50s and 60s were our most prosperous era, and the corporate tax rate was over 45%. And let's curtail the stock buybacks. For those of you who don't know, a stock buyback is when a firm buys shares of its own stock just to increase the value, and they've actually put nothing into the company to make it that much more valuable. Buybacks are going to exceed $1 trillion in 2025, and since 2020, the S&P 500 companies alone have spent $3 trillion in total stock buybacks. So just think of that number, $3 trillion. The average cost of the American home right now is about $400,000. So $3 trillion in those buybacks that didn't do anything for you could have gone in constructing about 7.5 million homes. And America has actually been going through a housing construction deficit for the past 15 years. We are about 6 to 7 million houses short compared to the normal 100-year trend. But don't forget, not all borrowing is bad, especially if you're putting that money into infrastructure. And for the first time in several decades, a major infrastructure bill was passed, which is allowing $1.2 trillion to enter the economy. This is the largest infrastructure project that America has ever undertaken. Even if you take the Highway Act or any of the other infrastructure projects of the past and put that cost in today's dollars, more is going into this current one. There's the CHIPS and Science Act of 2022, which is seeing a $280 billion injection into our economy to boost semiconductor manufacturing and research and development. The vast bulk of this money has only been approved. It has not yet entered the economy. That will happen in 2025 and the following years. Last but not least, we have to increase the current federal minimum wage, which is $7.25 an hour. Even though very few people get paid the minimum wage, we need to have a higher benchmark for the lowest wage that the American worker can earn. Last time we had real minimum wage reform was in 1950, when we nearly doubled it from 40 cents to 75 cents an hour. The reason why we did that is because after World War II, our economy started crashing again and we had negative GDP growth. We were facing another Great Depression, and doubling the minimum wage along with investing in infrastructure projects got us right out of it and put us into one of our most highest GDP growth eras in American history. Mind you, I said eras. Look at the trend, look at the number. I know that this number is higher, but what followed right after? History has shown us when you invest in the American people with infrastructure and the American worker with a higher minimum wage, we have a very healthy economy. And look what happened to our debt to GDP ratio after we spent on infrastructure and doubled the minimum wage. It shrunk. We didn't rapidly pay off our debt. Our GDP was just growing so fast that the debt that looked so mountainous during World War II became very small, and we easily paid it off. So our debt crisis isn't as world-ending as everyone's telling you, and there are easy solutions for it. We just have to galvanize to make them happen. I am the Geo Hussar, and if you think I'm a communist, I have a whole playlist on my platform trashing Karl Marx. Thanks for watching.